Hello and welcome to part 5 in our series of financial analysis by ratio analysis. My name is Stuart Patch. I'm a CFO and a financial educator. And today in this session, we'll be having a look at some key ratios on how to look at the return on investment for an organization. So in this session, we'll be covering off the earnings per share. We'll have a look at the PE ratio, the price to earnings ratio. We'll be having a look at the dividend yield, the price to book ratio, and the market capitalization of an organization. And we'll go through those ratios, understand how to calculate them, and what do they mean and how do we interpret them. So if this sounds of interest to you, let's go. Now, before we start, if you're not familiar with financial statements, please have a look at this video linked here. That gives you a quick oversight of the financial statements and some of the key terminology, and will help with your understanding of what we're about to go through. Earnings per share. So that'll be the first one that we start with. And what we're looking at with earnings per share is to see, well, what is the amount of earnings that the company is making divided by the number of shares that are out in the market. So this tracks a company's earnings over time. And investors will often look at this to see the quality of earnings for an organization, and we can use that to compare similar organizations in similar industries. Now, the second ratio that we'll have a look at is the PE ratio, or the price to earnings ratio. Now, this is looking at how much are investors willing to pay for every dollar of earnings within a company. And generally, the higher that this is, the bigger, the greater the growth expectations are for that particular organization or that sector. So the third ratio we'll have a look at is the dividend yield. And the dividend yield measures the amount of return that shareholders are getting back relative to the share price. And it's also looking at how much of a company's income are they paying out to dividends. So they're receiving some cash in hand, if you like, rather than staying invested in the company. Now, the fourth ratio we'll have a look at is the price to book ratio. And what this is looking at is what is the company price or the share price compared to the book price of the equity of the organization. And generally, the greater that is, if it's greater than one, then the company often has more intangible assets and there's expectation in terms of additional growth coming from them. And the final ratio we'll look at is market capitalization. And this is how big is the company when we look at its total share price times by the total amount of shares that are out there within the market. So when we talk about the market cap, it's ultimately what is the valuation of the company. This doesn't necessarily mean that's what an organization would pay for it. We'll have a look at that a little later. So let's start off by, we'll have a look at earnings per share for Smart Retail. To calculate earnings per share, we're going to look at the net profit attributable to shareholders, and we're going to divide that by the number of shares that are out there within the market. And this would be the average of shares that have been issued for the year. Now, for Smart Retail, we can see in 2026, they've made a profit of $281,100, and they've got 12,000 shares out there within the market. So when we look at an earnings per share, we get a earnings of $2.34 per share. So what that means is every share has its share of earnings of $2.34. Now, if we compare that to last year, that was $2.88. So there has been a slight decline in terms of that earnings per share, and that is really because there was a reduction in profitability over this year. Now, now we've calculated the earnings per share, we can have a look at the PE ratio, the price earnings ratio. So this is taking the company's share price divided by its earnings per share. And what this signifies is it gives almost an investor confidence. How much are investors willing to pay for each dollar of earnings within the organization? So if we have a look at this for Smart Retail, we can see that currently the share price is at $52.25. And we just calculated the earnings per share as $2.34, which means that there's a multiple of 22 times that people are willing to pay for each dollar of earnings. And this is actually quite significant. That's quite a significant multiple, especially for a retail organization. However, that could be extrapolated a little bit because the earnings per share has dropped a little bit this year. Yet there still may be investor confidence in the performance of the organization that means they're continuing to support that sort of multiple. If we look back last year, that was still at a reasonable multiple of 15 times earnings. And so if we get back to a similar level of earnings, then it's probably sitting more at that sort of level. So with the dividend yield, this is looking at how much of the company's earnings, its annual dividend, are returned to shareholders as a percentage of the share price. So we take the annual dividend per share divided by the share price. And it's looking therefore, what is the percentage return that I receive in income? And shareholders or investors that tend to value this more or look at this higher dividend yield are investors where they want to get some regular cash returns. So retirees being a classic example of that, they might want to have some regular cash flow each year rather than just relying on the capital growth of the organization. So if we have a look at this for Smart Retail, we can see that their annual dividend per share was $1.32. Divide that by their current share price of $52, and they've got a dividend per share of 2.5% or 2.52%. So not setting the world alight, but it does mean that there's a steady income flow that's coming through to investors for it's part of that cash flow that they're going to receive each year. The price to book ratio is looking at the market value of the organisation compared to its book value of the organisation. Now, generally, we'd expect the market value to be greater than the book value, and it's because the organisation may have intangible assets or other things such as goodwill, for example, that the investors may value. But in asset-heavy industries, this can be much closer to one as we work through. Now, the way we calculate this is we look at the share price divided by the equity value per share. And if we have a look at that for Smart Retail, you can see the share price is $52 and the book price per share is $14.39. So there's a multiple there of 3.6 or 3.63. So we can see there's a fair increase in the market value compared to the book value of the organization. And that will very often be because of those intangible assets, things like goodwill, expectations, customer bases, but also could be technology that the organization holds. Now, market capitalization or market cap is looking at the value of the organization as per the market. So it's taking its share price times by the number of shares that are outstanding. And this gives a view of the value of the organization that the market perceives for it and leads to categories that commonly exist of small cap, mid cap, and large cap, often signifying, as we get into that larger category, a stability, a size, a lower risk, whereas at the smaller end of the scale in the small cap, it's often expectations, maybe there's more growth, but there could be more volatility and more risk involved with that as well. So if we have a look at this for Smart Retail, we can see the number of shares outstanding at $12,000. The share price is $52.25, which gives a market capitalization of 6.2, nearly $6.3 million. Now in 2025, that was only $5.4 million. So you can see there's been some investor confidence has grown over the past year with regards to Smart Retail. So they clearly appear to be doing something right in the eyes of the market. So in summary, with our investment performance, we've had a look at our earnings per share, our price earnings ratio, the dividend yield, price book ratio, and market capitalization, all to get a feel of how well does the investor community assess our organization. Now, if you're interested in what we've gone through this series of 5, well, watch out for the next video where we'll have a look at 5 key ratios that we might be looking at if we are managing our own business. Till next time. If you're interested in learning more about financial statement analysis, have a look at the online course which is included in the comments below. It will take you through some of the steps we've covered off here, the introduction to the financial statement analysis, and through that we'll give you also a summary of Smart Retail's financial statements so that you can work through those numbers and go through the calculations. It will also go through each of the steps, the operating performance, profitability, and bring through a real world example. So we'll have a look at the real company and see how this translates in the real world. And it will also be supported by short activities at the end of each section so that you can test your knowledge and make sure you've got a good thorough understanding. Now, each of these steps and that we'll work through on the course will be supported by short little videos like what you've seen in this particular video. And at the end, it will also come down to a summary section to summarize what does it all mean, how do we use it, and what other information do we need to consider.